what is the point at which you should think about diversifying from the ownership of your company stock? For many employees in publicly traded companies now, they're receiving a portion of their overall compensation in RSUs, which means that they're kind of accumulating company stock through time. And since that's where you're contributing your efforts to increase the value of that company, in many ways, it makes good sense to invest in a company you know best and where you also think that the results of your efforts are actually leading to some benefit for the company. However, if that equity compensation is enough and the price of the stock is going up enough, there's a point at which you end up very concentrated. And you're concentrated in multiple ways that may not be obvious right off the bat. One of those is that if the company is doing well, the value of your holdings are going up and up. And it also means, by the way, that the stability of your role is probably relatively favorable because the company's doing well. If things turn and you have a concentration, then it's possible you could lose your job and see a lot of your net worth evaporate due to troubles that the company's run into, and you've seen a drop in the value of your assets and lost your job because the company has run into troubles. And so one of the things to recognize is that you're automatically invested into the outcome of the company just from your role in what you do for your work and your career. So you want to be careful about how much company stock you have that combined with your job means that your exposure to that company is really high. And at the point when the dollar value of those assets really starts to get up there and is the dominant component of your entire net worth, it's probably time to start to look to diversify and moderate the risk that you have, even if you really think that in the long run, this is a great company. I mean, there is a reason why most senior executives in publicly traded companies have diversification plans in place. They're called 10b5-1 plans that automatically are diversifying some of their equity holdings within a company.